Hi traders, and welcome to the technical analysis market wrap on Friday the 10th of June. So I've seen some really big moves overnight. A lot of the key zones that we were talking about last week actually have been broken now and are starting to get retested from a different level. So we'll jump straight into the charts and see if we can identify any trades for today and early into next week. All right, we'll start out here with the Aussie USD, and you can see that we've got, look, no one's surprised by what it's done here. It was looking weak last week, and you could see that we were already starting to sort of turn down. You can see the 4 hour was already starting to print lower highs and lower lows, and the 20 and the 50 were getting very close to crossing anyway earlier this week, and they all but have crossed now. So no real surprises that it's done this. It was finding weakness at the at this level here. So once it did reach that 72, sort of 60 to 70 area, it was always going to be in a little bit of trouble. And especially when every sign that we were looking at was weakening. So even though it looked strong on the move up, the weakness was starting to kick in well before it started to fall. So I think it gave us plenty of cues to actually get in on this one. So hopefully you were able to take advantage of that. Now we've got, obviously the rot's really starting to set in now. We've got a 20 and a 50 crossover here. And it's really basically already landed on the 200 and the support zone on the 4 hour. You go to the daily and you can see it's well and truly broken past the 20 moving average, which is generally pretty good support for it. So realistically though, it's found itself at a level, the 71 cent mark we know is very strong. So it's not like we expected it's going to bust through here in one move, but that said, it did fall very sharply. So, I wouldn't be just automatically longing from this level and trying to think that it's actually going to rebound or even go for the short. I think you almost need a fair bit of further evidence now to really give us the indication that it's either going to, continue on to the 70 cent mark. I'll get rid of this line here. We don't need this one here anymore. But the 70 cent is obviously the next real target. And we know that's very strong. You can see the two landing zones from last time were here. But although the 70 cents is very strong, you can see that we've only got two landings most recently. The 71 has about 5 or 6 different touches in different areas. You got there, right through this area here, and right through here as well, and it was resistance at this point here. So in a lot of ways, the 71 has been more of an obstacle for this one than the 70 itself. So we know that it's a very strong support, and obviously we have to trade accordingly. You go to the smaller time frames and you can see it very clearly what's going on here. How you trade it now really is basically looking for a bit of a pullback up to the 20 moving average, probably as a scalp, but it is only a scalp and it is definitely counter trending at that point because it doesn't look like it wants to reverse, and there's enough power on the back end now to probably see this get back down to the 70 in the near future. So realistically, if you are going to scalp, it's going to be a counter trend if you're going to go long, and I wouldn't be doing anything until, at the very least, of course, you've got a lightning bolt. So if you get a lightning bolt and it starts to push up, maybe get the trading up to so you got about 30 or 40 pips. It's about all you're going to get, more than likely, on the reversal before it hits a key moving average and starts to look for the shorts again. So just be very mindful on this one that it's heavily manipulated to the downside now in the bigger time frames. Okay, we've got big swings. So that being the case, it's going to be difficult for this to go long with any sort of momentum unless we have a substantial shift on a key time frame, like say the 4 hour. And as you can see, the 4 hour is a long way away from making higher highs and higher lows. And I wouldn't be looking at going anything but a scalp long. If you're going to go longer term, it needs to be at least a 4 hour change of trend. Other than that, looking for the shorting opportunities down to the 70 cent mark. And once again, just pull back to the 20 moving average. If you're going to scalp, up to there, and then maybe look for reversals from that point and look for the continuation down to the 70 cent mark as a better longer term scalp. So good trading, I think, really good trading on it. Just keep an eye on the levels and just be very mindful now that a key level is right at our doorstep, 71 cents, and for it to break we're going to need a big momentum push, but it is in a downtrend and it more than likely will do that. So that's probably the expected trade, and nothing short of a 4 hour lightning bolt on the way up will get us into the long opportunities when they eventually present themselves. US dollar CAD did what it should have done for us. You can see that it was building up momentum from this level here. You go to the smaller time frames and you can see the momentum building. And this is why we always talk about the lightning bolts. They're just so important because they really do give you all the clues you need to get into the market at the right times. And if you were watching the CAD and you were trading it, you could see that the momentum was starting to build. You could see the higher highs and higher lows. And once this candle did this, this was your break point. You can see that you got the lightning bolt up. You knew you had a confirmed lightning bolt at that point, but also just as importantly, you had a 20 and a 50 cross. And that's really, really important as well, especially when you're scalping. You know, look, it moved up a lot quicker than I would have expected. It's not like, you know, it's not like we predicted we're going to go up that hard and sharp, but it certainly did move up, and technicals, yeah, did kick it along, and you had your opportunity to get in if you were trading around that time. A little bit more difficult if you were looking at only from a 4-hour standpoint or a daily standpoint. Like if you're only waking up in the morning and you look at the charts, it's going to be difficult to get into, no question about that. But it is, if you were trading it and actually scalping it and watching it at the time, it was a pretty easy trade that looked like it was starting to go along pretty quickly. So the way we play this one now, look, effectively, you have to go to a daily time frame to really see where the, you know, you're effectively at the 20 moving average. And, you know, I'm very, very close to the middle of that channel that we know is quite strong. We know that there's very strong resistance above there, and we know that there's obviously pretty good support at around that 126.20 level as well. So it's almost in the middle of that channel, but it is at the 20 moving average. So realistically, that makes it a pretty hard trade now, because if to go up, it's got to go past 2 moving averages and a whole lot of noise. And of course, to go down, it's got to effectively get back down to this level here and reverse off the 20, which is almost a more likely scenario given what's in front of it. But I'm not that keen on either, to be honest. I would be preferring to either look for trades at around the 128 or trades around the 126. Where it is right now is a difficult proposition. I think the easy trade's already done. So if you didn't get that one, I think it's one of those ones where you have to wait and see and just let it play out a little bit and look for the opportunities. But I think more than likely we're going to be inside this channel now and probably trending towards both sides with equal evenness. I think it doesn't really, like I said, the front end a little bit harder because there's more in front of it, but it has got the momentum on its side. So if it does break the 20 and the 50 moving average and gets, say, to 127.30, then we can start looking for opportunities on the way up, but not right now. At the moment, it's got too much in front of it. So we get a daily or a 4-hour close above these levels here, say above the 127.20, then we can start looking at taking the next step up to there. But I wouldn't be doing that right now. I think it's just a little bit tough at the moment. All right, quick look at the US dollar yen. This one, you know, look, this has just been the powerhouse. Like, you know, it broke that level. We were talking about this over the last couple of weeks, really, how it was turning around here and starting to pick up momentum. You'll remember from last week that it had already started to move. Once it broke this level, we were waiting for a key break there. This was your candle. That is your entry candle right there. Once that candle closed above all of this noise here, you were in. And if you got that, you'd be pretty happy because you'd be up about 300 points at the moment. It's been a big powerhouse move, no question about that. But this is what happens when it breaks a key level, you know. And this has been very, very strong for a long time. It looked like the weakness was setting in, but in reality, I guess, you know, when you look at it and you draw a Fibonacci there, you only got a 23.6 or even a 38.2 pullback at the very, very most, you know. So you got to factor that in. I mean, let's draw it just for fun, so you know what I'm talking about. You can see it didn't even get to the 38.2, like it was in, you know, it was just on the 23.6. So it wasn't even a massive pullback when you look at it from the context of the biggest move it's had in a very, very long time. So yeah, I guess we shouldn't be surprised that it's done this, but it had to do it. It was no point trying to preempt it. It needed to do what it did. That was your candle, and once it was in, it was long gone. The way you trade this now, look, you know, where it's going to stop, no one knows. So I mean, realistically, it's hard to pick a top for it, and I wouldn't even attempt it. But if it does start to reverse and, you know, push back down and get around that 131 now, that's going to be a pretty strong support level for it. That's what you've really got to look at it from that standpoint. Now, if it comes back a couple of 100 points, that is the area that you're going to be wanting to reload. Yeah, going in long now is just a guess, really. So that's going to be a difficult trade. I wouldn't be probably, that's not my sort of trade. But if it does start to look weak again and starts to give us this sort of pattern, this is the area that we're probably going to find support. So you could trade it from there to there, but I wouldn't be doing that until we've got a lightning bolt on the way down. And it needs to be a 1 hour lightning bolt at the very, very least. So you want to see a series of lower highs and lower lows on a 1 hour, get the 1 hour time frame below the 20 and the 50 moving average and below this level here. Once it does that, then you've got a pretty smooth ride down to the 31, and that would be the reload zone for the long. So you can trade it both ways, but again, the long, I'd be very, very cautious of the long because we don't know where it's going to stop. We don't know where the resistance is, okay? So really be careful with that one. All right, dollar index did what we needed it to do. It's done the higher, high, higher, low sequence off a level of support, which is good. And of course, that's going to bode pretty poorly for the euro, which we'll touch on in a second. You can see that look, this was starting to happen last week. You know, we were talking about it. We could see we were starting to get that reversal. If it was going to reverse, this was the place it was going to reverse from, and reverse it did, and it certainly kicked on today. You can go to the smaller time frames and see that you didn't get really a chance to get in on the dollar index. It all happened overnight, but you know, like I say, it was promising to do so, so we shouldn't be surprised. The euro is, of course, is the negative factor on that one. This was starting to show those signs of weakness, so you could see a little bit like the Aussie USD was. You could see that it was starting to get weak. It was trapped in between those two zones at a level of, you know, difficult resistance for it. So you knew it was going to be in trouble. You know, even from this point onwards, it was going to be a difficult trade to go long. Had a lot of work to do to get up there. And when it started to show these weakening candles, no surprise to see this big negative candle now that the dollar index has broken out. You know, look where it goes to from here. Look, right now it's looking quite ugly at the 106.20, but yeah, its realistic target is 104.80. So if we get a daily close or even a 4-hour close below these levels and it continues to sell down, that's our range. We'll be looking at the 104.80 as the target for the euro. And of course, if the daily gets back up again and closes up above these levels and above these moving averages, we start to get keen on the long again. But to me, I wouldn't be going long on the Euro USD until it actually broke this level. Now, it needs to actually get past that 107.80 area and close a daily candle above it for me to be interested in the long on the Euro. Now, I think it looks more short than long, but that doesn't mean it won't go long, but it has to prove itself, okay? So, and the proof on the way down is a hell of a lot closer than the proof on the way up. A proof on the way down that it's going to continue is only 20 or 30 pips away, whereas the other one is 120 or 130 pips away with an extraordinary amount of resistance in front of it. So I know which one I'd prefer, but I'd trade both depending on which one happens. So pretty easy trading. You just have to wait for the right one, and the target's very clear. Okay, 104.80 there, and if we break above this level here, we'll be starting to shoot for the 110 level again, which is this level here. All right. And finally, we'll have a look at the S&P 500. This has been the big one, or the one that probably people see the most of. Look, we drew a symmetrical triangle. I drew this earlier in the week. You could see that it was forming, and yeah, where symmetrical triangles break, yeah, nobody knows that. That's the whole pattern premise, that it can break either side on a symmetrical triangle. It was a symmetrical triangle, no doubt. It was also a symmetrical triangle being backed up and bolstered by the fact that it was trading in between the 20 and the 50 moving average for several days. Okay, you got 2 weeks of trading there inside those two very powerful moving averages on the daily, and they were also consolidating and actually constricting the price movement inside the triangle, and then it did eventually break. It broke, you know, just after the 2/3 point, which is no real surprise. That's what the pattern demands. Problem with this one is, of course, that it never really gave you a chance to get in, because I mean it's almost fulfilled the pattern of the triangle on the candle that it actually closed out on. I mean, and that makes it very difficult to trade. And that's what happens when it comes out on a news event. A news event caused this to break that triangle. So although it is a technical pattern that has done the job because it was constricting and it did break either side, which of course it has to do at some point, it was difficult to trade. So it's not like you could have been able to, you know, get in on this one. The problem for this S&P 500 now is it has broken an extraordinarily key zone of 4100. The 41 was a very, very strong level for it. It was almost the last line of defense, really, and in a lot of ways stronger than the 4000. So that has now well and truly been broken. The daily is actually closed. There are 2 ways to look at this. You can either wait for it to pull back. If it does pull back to the 4100 and trade it from underneath, looking for shorting opportunities down, because now it's broken, it's weakened significantly. Or if it gets above it and closes above the 20 moving average again and above the 4100 on a daily in the next day or two, then that can be almost negated and we can start looking for longing opportunities again. But you know, that it looks weaker than it looks stronger now. There's no question about that. So it's trading under all of the things that you wouldn't want it to be trading on if you were looking for longs. It's broken a very key level. In a perfect world, it would come up and test the 4100 from underneath. We'll get a lightning bolt down on a 4-hour or a 1-hour time frame, and we start to look for shorts back down to the 3900. That's probably the ideal scenario now that it's done this. Look, it could reverse completely on the CPI data released tonight. We know that. So it's one of those ones where you got to trade with caution until CPI is out. That's going to give us a very good idea on how inflation really is tracking and how the S&P is going to react to that. If it completely reverses everything that's done today and it's closing and trading there on Monday, very, very bullish sign for it. We start to look for long opportunities. But if it does nothing and sells off even further, we're likely pushing down to the 3850 to 3900 level again early next week. So that's probably the trend that we would be looking for. In a perfect world, it'll track up and test the 4100 from below it. Again, that would be a great result, because from a technical standpoint, there's a very, very strong resistance there. And if it starts to fade off there, we get a really good entry point to continue the shorts on this one. So if it gets up above 4100 and closes there, we're looking long next week. Anything except that, we're looking for shorting opportunities after the CPI data tonight. Let's just see how that one goes. Well, I hope everyone's had a great week's trading. I think we've had some really good technical setups and opportunities. Hopefully you're able to get some of those pips. Trade with caution tonight with CPI, and have a great weekend. I look forward to seeing you next week.